Welcome to the IRS Whisperer podcast. This podcast is designed for tax professionals with a spin toward IRS representation. My name is Dan Hem, and I'm a CPA CTR. New episodes will drop weekly on Thursdays. Each week we'll be giving you exciting material to help the tax pro in their tax practice. That's assuming you can say exciting and taxes in the same sentence. On the IRS Whisperer podcast, each episode will cover 3 different areas of a tax practice. We will present the marketing moment, which will cover various topics in marketing or sales to help you generate more clients and revenue in your business. The world of practice management will give you suggestions on how to better run your tax practice. We will also cover our technical time that will cover some of the latest changes or tips, tricks to help you in handling your IRS representation case. So I'm so glad you are here and hope you enjoy the show. Now, on to today's episode. Welcome to the IRS Whisperer podcast. Today I want to talk about raising fees. Why is it so hard in general for anybody, including a licensed tax professional? So in a world where inflation and market dynamics are ever present, it might seem puzzling why licensed professionals often choose not to raise their rates. Today I want to explore a few key reasons behind that decision and why it's such an issue for many tax professionals and how it ultimately affects your clients, how it affects your profits, how it affects your psyche. So we're going to talk about a bunch of different things today. So first, I want to differentiate between existing clients and prospects or new clients, because it's generally easier to raise fees on prospects and new clients versus existing clients. So first, let's talk about the existing clients. Why is it so hard to increase fees on there? Well, usually the number one reason is just the fear of losing clients. Okay, it's a very common concern. Many professionals dread that a fee increase might lead to losing long-term clients. There's just the fear that you're not going to be able to get there with them, and that is a valid concern. So I totally agree and understand with that. But how, in most cases that I've ever dealt with, the existing clients understand. Most everybody knows that there's fee increases that need to occur over time. So, for example, you go to a Starbucks, you go to Target, you go to Walmart, you go to Best Buy, anything online, you're going to see fee increases over time. It's just natural. It has to happen. So why is that any different for you? Because you're going to have your tax software increases, the memberships and organizations that you're in increase, the online services that you need, whether it's online software, secure portals, anything that you need to have, their prices are going to increase as well. Your staff, if you have staff, going to want pay raises. They're going to want benefits. All of those things increase. And if you're already offering benefits, such as retirement, such as health insurance, all of those things increase over time. So you need to make sure that you are increasing your fees. And while the fear of losing clients is not an invalid concern, it is not as big as you think it is. In most cases, if you make it a reasonable increase of somewhere between 3 and 10%, most people won't even bat an eye at that. Yes. But in 500 clients, I raise my fees 3 to 5% every year. I always said on like 98% of my clients. And so, and I rarely got any pushback in regard to that. And I did that every year for the 14 years I had my practice. And I still do it today in my representation work. I still increase my fees. Now, next one is client loyalty. You're going to have a fear that those relationships you're going to lose that. And you feel that because they've been with you for a long time, that you shouldn't be increasing your fees. It hurts my heart when people do this, because I had this, now here's a story that I had. I had an elderly couple. Their CPA actually retired, and they had been with him, I want to say it was like 20 years. They came to me, and when I saw the invoice in the file, they had paid him $200 for preparing his 1040. At the time, I was charging them $600. And so if you look at that, he was losing money, leaving money on the table with these people because they paid me $600 to prepare their next return. And so if you look at, I mean, even if he just did an increase over time, that, or just say the simple thing would be $400 over, call it 15 years. That's some serious money. And that's on one client. Keep in mind that, your clients if you do everything that you're supposed to do, you give good client and customer service, that loyalty is not going to change. The loyalty changes when you screw things up, when you don't perform, when you don't do things as you say you're going to do. That is going to be more of a problem for them to leave than increasing their fees. Now, obviously, the next one would be economic sensitivity. Okay, so with many clients, that some of them are feeling financial strain. Okay, and that's why we have that sensitivity, because we know we're numbers people. We know and understand that. So when we talk with these people, we're afraid that they can't afford it. We want to be able to provide services for them. And so you need to make sure that you kind of factor that a little bit in mind. But keep in mind, here's a story I heard from another tax professional. They actually had charged low fees for a 1040 for this couple. They both, I think, were in some form of ability, or I should say have a disability. They were in their 50s. They'd been doing their return 7 or 8 years, and they had made some kind of comment to the professional that they were considering doing something that basically was going to lessen their taxable income on the return, which already wasn't that big. And the tax professional, after all these years, finally said, if you do that, how are you going to live? Well, then they came up and said, oh, well, we're fine. We've got, they had a few $100,000 in the bank. They had all these other not taxable monies that was coming in. And so the tax professional wanted to kick themselves because they kept the fee low because they saw what was on the tax return. And what was on the tax return was not fully representative of all the cash that came in. So sometimes that's that appearance of the economic strain and sensitivity is not really there. It's in our mind, not in theirs. So, always be mindful of that. Now, keep in mind that when you don't raise your fees, the next issue is that you're undervaluing your services in many times. And you undervalue because you feel a doubt or an insecurity in terms of what you provide. You feel that raising your rates, raising your fees is going to be looked upon negatively with you. And I think you give people more credit than they really have in that type of a situation. Because if you really look at it, higher fees gives a higher sense of worth and value to your clients and to your prospects. Okay, now they may not necessarily like paying higher fees, but some people realize that when they're paying higher fees, they expect a higher service. So now if your fear is the fact that you're not going to live up to those, then you need to obviously do things to fix that. And money can help fix some of that. So if you hire more staff, you pay your staff better, you buy software and other tools that will allow you to basically do more with less and provide that 5-star customer service, that's not going to be a problem. Now, consistency and predictability. Maintaining steady fees allows for a predictable experience for clients. Okay, so obviously, if they know their fee is $200, $500, whatever it is year in, year out, then obviously I get that. But if you also get them into the habit of raising their fee 3 to 5%, I mean, keep in mind, look at this. If you started with a fee of $200 and you raised it 10%, how much is that? That's $20. To most people, going from 200 to 220 is not that significant. So even if you raised it 5%, that's $10. So if you did that and you consistently did that, you keep in mind, it's going to take some time for the fee to get up to a higher amount. So I always ended up doing the increase for existing clients every year. And then I always increase the amount for new prospective clients at a greater rate. And I'll talk about that here in a few minutes. Next item is fear of negative feedback. So even the thought of potential complaints from clients raising rates can be daunting, create hesitance in you. And I'm sure you feel that way. I know mentally I feel that way as well. And I get it. But again, you give people more credit than it is. Now, are there going to be people who complain? Yeah, you're going to get a small handful of people. So that's in general, maybe 3 to 5 at most. Occasionally you might get 1 or 2. And over the years, I hardly ever got anybody who really complained about the fees. And if they complained about the fees, it was more about getting their worth of the fees. So if I wasn't performing, if I wasn't providing good service, if I wasn't giving good feedback, giving them tax saving ideas, doing those types of things, giving information timely, then they're going to give a negative feedback. So the thing that I would encourage you to do is to try it. Now, let's talk about existing contracts. So sometimes you might have already, contractual obligations. If that's the case, then that's fine. The thing is, you have to know when those contracts or agreements up. For example, if you said that you were going to keep the rate or the fee this amount for so many years, then when that time is up, you should give them an advance notice. I recommend no less than at least 3 months. You can do it as little as 30 days, but give them a good 3 months notice and say, hey, your fees are going to go up. Now, if you do your contracts correctly, then what you should have is some kind of escalator clause that the fees increase automatically every year. So if you're renting an office space, chances are you have a lease that has something like that, where you might start in it might be $1,000 the first year, $1,050 or $1,100 the next year, and then it goes to $1,150 or $1,250 the next year. So, you're going to have that. And if you had that already built in, if you went from 1,000 to 1,300 in 3 years, that's a big jump for them. If you're doing it a little bit over time, then it's not such a big jump for the client. And then you just, you adhere to those contracts and those agreements, and then you increase when is necessary. Now, one other thing is that you have client dependency. So when you rely on a small number of significant clients, you might avoid raising fees to lose those. So if you have one client or 5 or 10 clients that are providing, let's say, 50 or 80% of the fees in your business, then you have a big problem there. So you need to make sure that you are providing the service, you are increasing the fees, and you're also with your lower fees, that the client ends up being very dependent on you as well. Okay. And if you lose them and they're a significant portion of your income, that can totally kill you. Keep in mind, you still need to raise your rates. And when you're dependent on one client, you got to find ways to kind of diversify your income. You need to find ways to have different types of clients that you can have in there. And lastly, the issue about raising your fees, your prices, your rates, whatever you want to call it. Sometimes people feel that it's wrong. They feel that it's unethical, that's one of the reasons why they feel that they shouldn't do it. You sometimes feel like there's usurious fees. And granted, I felt that way one time. I couldn't believe that some guy would charge some crazy amount for fees. But then I realized later, of course, that was after working with a mentor coach who helped me to kind of change my mindset about that I was worth more and that I'm providing the value, and my CPA license is something of value, and that knowledge and experience, that it was very important for me to actually increase my fees. And then along those lines, that some clients self-select themselves out over time, and that's okay. Some of those clients leave because they're the ones that are nagging you. They're always needing some hand holding. They're asking 50,000 questions. Not to say that that's wrong. It's just there's a right way to do it. Sometimes they put the pressure on you by giving you things 2 weeks before a deadline. They're always whining about their fees, regardless of how much it is. And sometimes you tell them information and it goes in one ear and out the other. And it's like, why am I doing this? Now, so let's talk about potential clients and why you should look at raising your fees for them. Now, one of the issues why you may not want to increase your fees is you feel that it's a competitive market. Tax prep, for example, is a commodity. There are so many people out there, although it's actually been getting fewer and fewer over time as the baby boomers retire and there's fewer people coming into the profession. But, you feel that there's a fierce competition and raising your fees is going to deter prospects from engaging your services. Now, keep in mind, if you increase your fees like I did over time, I started at one time, I think after about 4 years of being on my own, I decided to say, okay, starting this year, my fee was $300. Then I increased my base fee $50 every year for the next 6 years so that I got to $600. And then the next 2 years, I increased it to $150. Now, keep in mind, let's just make the math easy. If my rates were $450 for a 1040, but later I'm charging $900 for a 1040, I only need one client at $900, whereas at $450, I need two to make that same amount. Okay. And keep in mind, you don't need to take everybody as a client. Okay. And nor should you. You need to make sure that you are handling the cases that you want to take, people that you like working with. And then if you even let them in the door and you find out they're not the kind of client that you really want to work with, whether it's the industry, their personality, the way they operate, then you need to show them the door. There are plenty of people out there that will work and might be a better fit for them. Now, another hindrance to this is people trying to build your client base. Now, this is usually going to affect more newer professionals trying to grow their practice. They're trying to establish credibility and goodwill, and we think that needs to be done by having lower fees. In fact, if you're charging less than an H&R Block or Jackson Hewitt or Liberty Tax, then you are doing yourself a disservice. And I've met many a tax professional, even a licensed tax professional, an EA, CPA, even some attorneys who aren't charging anywhere near what they should be charging. So you almost think the opposite too, because if you're charging lower fees, then the prospect might say, hey, why are they so much lower? And think there's something wrong. Because have you ever tried to buy a product or a service thinking, hey, that seems kind of low and, what kind of service are you going to get? So there is something that you get what you pay for kind of aspect. Next one is the perceived value. Again, we look at confidence, our confidence in ourselves. And for many people in our industry, we just don't value ourselves. And I always say this in a lot of times when I talk about fees, that I tell people, you don't need my permission to increase your fees. But if mentally it helps, because sometimes I've had this happen to me where just, some mental switch in my mind, and then it's like the lid came off. And so if you need permission and you need that mental permission, you have my permission to go raise your fees. Okay. So, because that perceived value, there's a, uncertainty on how you feel that the prospects are going to value your services. But if you charge a higher price, remember I said earlier, you increase your fees, that gives you more money with more tools and resources that you can go and buy and do. Like, for example, you could go and buy a better research software. Not that you necessarily need to. There's plenty of smaller, cheaper ones out there. There's many memberships and things that you can pay to be a part of, but you don't have those issues or problems. And, we are business owners like our clients. And so we have cash flow problems. We lose sleep at night because of this, that, and the other. And so you need to have a better perceived value of yourself. Now, obviously, we feel that sometimes economic conditions, like for the last few years, we've been dealing with higher pressures of inflation. And so that the perceived perception of the public is that they're getting pressed from left and right in terms of increased fees. So a prospect is going to choose to work with you or not. And they're more likely to choose you more because your personality, more of what you offer, more of what you're doing. And if you're doing other things like if you write a book, if you speak, if you offer webinars, if you have videos online, if you offer courses, doing all these things that have this sort of celebrity expert status that raises you higher up and gives you a higher perceived value. And I'll tell you one thing for certain. When I started doing that, I've got at least 3 books of my own. Just having those books raised me higher because it's just what we do. People who are authors, we tend to raise them up on a pedestal a little bit more. People who are the speaker in front of the room, we raise them up in the pedestal a little bit more because they're the ones that's speaking. They're the expert standing in the front of the room. And, keep in mind that the value goes, you increase that with a lot of those different types of marketing related things. Now, next one we'll talk about is initial impressions. Okay. So we're always fearful that people are going to have a bad first impression, that you say an amount and you, in your mind, and I've done this many times, I still do it today, where I say, I'm going to quote this fee. And then I'm like, no, I'm going to quote this fee. And I'll tell you what, at least 9 times out of 10, if I've gone with the lower fee, I will usually kick myself in the butt. Why did I do that? I shouldn't have done that, because I usually end up doing more work. They don't perceive the value. There's more of this weird expectations of the service. So I just got over that. Yes, you want to provide a good first impression. And that's more in the customer service aspect of things that you should provide in a first impression. If you do everything right, you're talking to people nicely, your staff helps them, you make a good first experience, giving them new client information, you send them a shock and awe box, which I've talked before about, and you just give them a good first impression, then that value goes along with it. Then it'll be easier for you to provide the value in the dollars. So when you quote that fee, I can't tell you how many times I've quoted a fee that I, in my mind, thinking, wow, yeah, it is kind of high, but I feel that I'm worth it. And people will just say, okay, that sounds good. And it's like they don't even bat an eye. When you have that kind of experience, it's kind of one of those eye-opening straw that broke the camel's back type of experience. You're just going to sit beside yourself. I always use this story. I've coached youth soccer for my daughters years ago when my middle daughter was coaching a U12 soccer team. And we had one girl who was actually very good, very fast, and she was left-footed. So we had her on the left side of the field. This was a recreational team. And I always told her, more often than not, the ball is usually going up the right side of the field. And I told her, stay on your side and keep going up the left side of the field. And I said, because what's going to happen is that ball's going to roll across the face of the goal. And if you're standing there in the right position and that ball is there, you're going to get the goal. And so, she'd do it sometimes, then she'd not, then she'd do it, and then she'd not. And then one time she ended up doing it, and that happened. The ball rolled across the face of the goal and she kicked it into the goal. She came back with the biggest smile on her face, all happy and excited. And I told her, I said, see, and I tell you what, after that, she was always there. So when you have that experience, it actually does put a smile on your face. It's almost mind-boggling. And I challenge you to try that. Especially, it's easier to raise the fees on new prospects, new people who are coming into you. So I might suggest that the next person that walks in your door, the next person that calls on your phone, try that. Try and increase your fee. Whatever you're charging, charge at least $50 to $100 more at a minimum. If you're charging some higher rates, like I charge $1,500 for investigation of liability fee. I've got some of our members in the Tax Resolution Academy that charge I've seen as low as $250 and as high as $3,000. So whatever you're charging, if you charge something like that, then I would say, let's say you charge $1,000, go to 1250, go to 1500 the next time. And I think you might be very pleasantly surprised. Okay. Now, the next thing is obviously the fear of rejection. We're always fearful of rejection, especially for new people. Again, it's just in our nature as tax professionals because we're generally known as an industry of people who have a heart. And because we have that heart, we end up taking a lot of stuff that we shouldn't. We're afraid to tell people no, hey, you're not the right fit for me. And, we've sometimes, if you're like me, you've been very fortunate enough that you will have somebody who will not pick you, that you're thankful that they didn't pick you. But unfortunately, I bet you there's many of you out there listening to this probably took in a client or 2 or 10 or 20 that you wish you hadn't. And then you feel like you're locked in with them. And there's mentally this process. It's almost like you're in the mob. Like once you're in the mob, you can't get out. It's not a thing that you leave and live to tell about it in most cases. So it's although it's not the same thing, it's just that's kind of how we feel. So, you obviously should seriously look at that, but that fear of rejection, I get it. I hate being told that no, I don't want to hire you. And it's not like they're saying that they don't like you. There's just something that they felt that they connected with somebody else. Have you ever had that kind of feeling? Have you told somebody, usually if you're like me, you'll go and hire a service, like you're looking for a new plumber, or like recently I just was looking for an appliance repair person. We called around to a couple of people and you just have this rapport, this connection that you have with somebody. And sometimes that works with you and sometimes it doesn't. Okay. And so, I think at the end of the day, what I just say to people is just, try not to think about that. Some people are going to choose you. Some people are not. I mean, it's happened many a time to most people, unless you're brand new into the industry. Okay. Now, the next one ends up being market research. Okay. And I'll look at that and kind of combine this with your marketing strategy. So, when you do your research, if you do research and you're looking at competitors, and let's say you're looking at competitors in your local area and you see what they're charging. And so you feel like you need to charge what they're charging. And I would challenge you to say that's not what it needs to be, because if you're charging the same thing that they're charging, then you have to have something else that helps differentiate yourself. Keep in mind that if everybody was charging 300 and you charge 600, people think and say, wow, they charge 600 and they're going to want to buy you and pay you 600 because they feel that there's going to be a better value there. Some people just want to buy the Cadillac, the Beamer, the Mercedes, the Bentley, the Lamborghini. They just want to buy that bigger, more expensive car or whatever the service is. Some people, when they go to Starbucks, they just go and get the more expensive one, the largest size one, because that's what they feel that they're going to get the most bang for their buck, right? So now keep in mind that your strategy also shouldn't be a low pricing strategy. It's not to say that you can't have, that when they talk about businesses, they say that there's a lost leader sometimes, and there could be certain services that you do to get somebody in the door. But that's a thing that for certain that you can offer at that price, that it's not going to take you a ton of time. So I've heard some people do financial analysis, say on the representation side, where they might offer it, say, for $100, $200, $250, $300, $299, that type of a thing, where you get an 8821, you pull the transcripts, you use your tax resolution software that they all use. I think all of them give you a nice, pretty report that's usually 20-ish pages that will have some nice printed words, and some of them they'll import the transcripts and they'll do some analysis with some charts and graphs and things like that. So you use that as something that might take you an hour to do. But the goal is that you're going to try and get them in so that you can later sell them on a installment agreement, on a currently non-collectible, offer and compromise, partial pay installment agreement, deal with liens, deal with penalty abatement, go to appeals, all of these other things where you can charge bigger dollars for. Or on the business side, you're dealing with 941s and you're dealing with the trust fund recovery penalty. and that assessment and the defense, and you're racking up the bills or the dollars in terms of fees to you. Or you've got a problem with a trucker who's got a 2290 problem when it turns out that he also has 941 problems, and he's got 1120S problems, and then he's got his own personal 1040 problems, and then he's got a partner who's got his 1040 problems. And so now you have to deal with all of these people and all of these entities, and each of them come with their own things. I mean, it's not uncommon that if you had that type of a situation where you could end up having $20, $25, $40,000. We had one of our members one time that they charged 3 offers and compromises. I think there was a business owner and the business owner's son that they charged $100,000, and they had 100 hours into it, which equated to basically $1,000 an hour that they got for that particular job. Okay. And so that kind of happens, and you just need to look at and have that strategy. What is the item that maybe that loss leader to get them in the door? And so depending on how you look at that. Okay. Lastly, one of the things that I want to talk about is your reputation. And people feel that if they raise their fees, whether it's for the new people or even existing clients, that your reputation is going to take a hit, that people are going to go and do a bad Google review. They're going to start talking bad about you, and it's going to hurt your reputation that so-and-so charges so much, or they increase their fees. And again, you give people more credit than they should, because people might talk about you when that happens, but it doesn't happen as often as you think it is. And unless you're in a really small town, and there are many practitioners who are in that type of situation. Talked to a guy in Oklahoma who was in that, where it was like the next largest town, I think there was like 1,000 people in his town, and the next largest town was like 40 minutes away, and that had the town of 15,000 people. So unfortunately, that's going to happen with the smaller towns, and that's not to say that that's not valid, but for most of the rest of us, it's not going to affect your reputation. If you do it poorly, if you present it poorly, you're not providing the value along with those increased rates, yes, you're going to take it in the reputation area. So at the end of the day, I highly suggest that you look at increasing your fees, and especially now, this is being recorded in July of 2024, before you get into the next tax season, before you quote your next fee for an exam or collections case or anything of that nature, in your next bookkeeping, payroll, look at increasing your fees. You should look at increasing your fees on everything, every service you provide. If you're charging probably under $500, you seriously need to look at it. And if you're over that, you still should look at it. Tax professionals. So whether you're an unenrolled preparer, you're an EA, CPA, attorney, if you're a bookkeeper, and even bookkeeping has a value, and bookkeeping is another one of those things that's perceived as a commodity, that everybody can do it. And while that is a true statement, but can everybody do it correctly, properly, timely, provide a good service, provide a good product? And if you write a book, that's something that's going to elevate you tremendously. So with that, I would love to see if you could let me know, Dan at Tax Resolution Academy. Send me an email and let me know your thoughts. What are your problems, the issues mentally that you have with raising your fees? Or if you've done it, let me know your successes or failures. I'd love to hear. I learn more from hearing from people. I love to interact with people. So let me know what works for you. And with that, I hope you guys have a great rest of your day. Thank you for listening to our show. We hope you received some valuable information to help you in your tax practice. The IRS Whisperer is sponsored by the Tax Resolution Academy. If you have any questions you'd like to see addressed on the show, or comments to help us make it better, please reach out to us on social media. Follow us or download our shows on your favorite podcast app. Tune in to our next episode, where we'll give you some more exciting information to help you grow your practice.